Wow, what a whirlwind of a trading session that was. We saw the S&P 500 surge out of the gate and looked like it was going to have a very promising showing here today. And then with about an hour and a half left in trading, we saw a tweet storm coming out of President Trump's office, and it suggested that Republicans should stop negotiating with Democrats regarding the $2 trillion stimulus package that had been proposed. And so at that exact moment in time, we saw the stock market tumble. As you can probably imagine, volatility spiked and the VIX went up to 30, and we saw most of the gains, except for in the utility sector, disappear in that final hour of trading where we closed near the lows of the session. So a lot of activity here today. Let's go ahead and get into it all now. Welcome to your Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's October 6th, 2020. First of all, if you're new, welcome aboard. Remember to go over to our YouTube channel, click subscribe. While you're over there, check out our description area where you can sign up for our email distribution list, so that way you can be notified anytime these videos are ready to be viewed. In addition to that, we're heavy users of Twitter. I would encourage you to follow me if you're not doing so already. My handle is @BrandonVanZee, and we really appreciate those of you that click like and retweet on these Market Outlook related tweets. Lastly, we do have a presence on Facebook as well. Feel free to join our group at that web address you see embedded in the logo in front of you. All right, so let's get into today's trading activity. And the view that you're seeing here initially is a little bit different. This is just on my trade tab here, but I wanted to highlight the exact moment in time when we started to see those tweets, just to kind of give you a sense of what I was referring to in the introduction. Some of you I know don't get a chance to sit in front of your computers during the trading day, so wanted to make sure that you were aware of this activity. And so this is the S&P 500 we have pulled up here in front of us. I know it's probably pretty hard for some of you to see on your cell phone, but I'll kind of point my way through it. You can see the S&P 500, or the SPY in this case, which is the ETF that tracks the S&P 500. It opened up right around 340. And as the day went along, it kept on moseying kind of sideways, eventually started to make a legitimate move higher. You can see we topped out right here at 342.17. And then at that moment in time, the bottom just completely fell apart right there. You can see that we had a complete drop lower. And we eventually kind of stabilized on SPY around 335, and we ultimately kind of traveled sideways for the last, let's call it 15 minutes or thereabouts. And that's kind of where we're trading in the after-hour session right now as well. We're at about 335 here in the after-hour session. So basically we went 342 to 335 in, let's call it an hour's worth of time, based almost entirely upon the tweets that we've been seeing regarding the stopping of negotiation regarding the stimulus bill. So we saw all kinds of erratic trading activity as a result of that. I mentioned in the intro that the VIX surged, and so you can see the exact time when the VIX went up was the exact same time when the stock market went down, and so the VIX ended up going up to finish the session at about 30 when it was all said and done. Now on over here to the charts, whenever we have a big movement type of a day, I like to bring up this particular chart. Remember, if you're a premium member, you can access it right here on chart 6D. But this particular chart will give us a sense of whether we saw a 1% move up or down. And today, of course, was a 1% down move. In fact, it was 1.4% to be exact. And you can see right here that this red candle went from the black starting line, that's the zero line there, down to finishing below the blue line. And as you can see in the label right there, the blue line represents a 1% move. And of course, if it's under the black line, that means it was a 1% down move. If it ever finishes above the blue line, like it did yesterday, that would have been, of course, an up move. So effectively, after we had so much joyous market celebrating yesterday, you can see we effectively ended up having, kind of a bearish engulfing candle there. Let me kind of shrink this down so you guys can see the price action up above a little bit better here. And so you can basically see all of the celebratory activity yesterday was completely given back with today's move. And you have a little bit of a long upper shadow there on top of today's candle to boot. So not particularly exciting activity there that we saw in the final hour of trading, again closing near the lows of the session. Now, whenever we have these big 1% down days, another thing I try to show you guys and point out for you is by coming on over here to the Market Watch Visualize area, you can get a sense of market breadth. There's a number of ways you can look at market breadth. There's not just one, but one way is to look at the advancers versus the decliners. So up here in the Visualize area of Thinkorswim, we've got our index watch, and we're looking at it versus the public S&P 500 watch list. And you can see right here that we had for every one advancer, we basically had 4 decliners. So in the end, 400 out of the 500 stocks on the S&P 500 did close lower today. And remember, earlier in the session, the market was up big. This was, it was actually a quite strong market breadth day early on, where we were getting really strong activity out of many areas of the market that hadn't been our leadership groups. So that's kind of what is even more depressing about this move at the end of the day, is it kind of seemed this morning like we were finally getting participation out of, some of those banks. And, I mentioned in the intro that the utilities did still finish higher, but they were up way, way, way more prior to that. In fact, one thing that I wanted to point out regarding the utilities is utilities on my sector selector. Now remember, I put this together on Friday nights, so it's not going to include the activity from yesterday or today, but it'll still give us a good sense if there's any sort of rotation taking place. And you'll notice that utilities ended up at number 6 as of Friday night, which had advanced from number 7 the prior week and number 10 the week before that. So we've seen some really aggressive relative strength out of the utilities. In fact, I was tweeting about that over the week. I think it was on maybe Friday that I had mentioned it. Over here. So again, if you're not following me on Twitter, make sure you're doing so. My handle is @BrandonVanZ. But here you can see on October 2nd, I said park this in the strange but true category. On an equal weight basis, utilities currently have the best 1-month performance of all the 11 sectors. And I don't think a whole lot of people have been talking about the utilities, so it kind of seems a little bit strange. But that is indeed what we saw. And then here today, I tweeted this out as kind of a retweet. This is just one example of a utility here, but we saw a lot of utilities that kind of had activity that looked like this, where we're breaking out in a big way and people aren't really talking about it. Now, with the big sell-off at the end of the day, it is true that stocks like this one right here, which is PCG. This is PG&E Corp, the big utility out of California. Some of you know that we did a market outlook trade application on it in my presentation a few weeks back, and still have that trade on. So we're happy about that movement higher on it. But a lot of utilities did look like this intraday. Now, I had no idea, of course, that President Trump was going to have those tweets coming out later in the day, but many of the utilities did end up selling off by the end of the day, but they were still the only sector out of the 11 sectors out there that finished higher on the day, despite the late day sell-off across the board. Also, while we're over here on the internet, let me just check in real quick on the last time I did the video. You guys know that I say fairly regularly that my goal is to achieve 100 likes on Twitter if you guys are getting value out of these free YouTube videos. And as long as we're up and over 100, I'll be happy to give you a full-length 30-minute version. But if we're below that, then we'll just stick to the abbreviated version. And so as I check this, unfortunately, we came up a little bit shy today. Only 98 of you clicked like. And as I always say, if you prefer the shorter 15-minute version, then don't click like. And so that's the impression I'm getting right now when we're seeing only 98 likes come through. For those of you that want the longer 30-minute version where I include the 12-grid analysis and trade applications and things like that, then make sure you're clicking like there on Twitter for us each and every day. We think it's a pretty small ask out of you, as it only takes you 5 seconds, and it takes us quite a long time to put these videos together. So thank you to those of you that do that on a regular basis. But today, those of you that wanted the abbreviated version, your voices have been heard here. All right, let's go ahead and get back on track. I also wanted to quickly show you on the visualization area, we can also go to the heat map itself. And as we look at this, you can see that it's mostly red across the board. We have a few patches of green here and there. A lot of them are kind of coming in the lower right-hand corner here. And these are the utilities that I mentioned before. So like NextEra, Southern, American Electric, Exelon, Eversource, Dominion, Con Ed, all of those were still up on the day. You saw a smattering of other ones that were up, like Cisco Foods, which is a company we just talked about in one of my classes yesterday. It was up nicely today. We see this green patch right here. So Steris Corp was up 3%, and Automatic Data Processing was up. So there's a handful of stocks that managed to still stay up, but for the most part, you see this sea of red that we're looking at here. And the one that probably stands out the most with the deepest shade of red is right there, Boeing. Boeing really got hit here, down nearly 7% today. So that probably had a pretty big impact on the Dow Jones Industrial Average. Let's go back on over to our normal charts now, and let's pull up chart 4B. This is our market forecast view. So the market forecast is a technical indicator that you can find on the Thinkorswim platform. So it's these three different colored lines that you see below each of the charts here. And when I'm looking at chart 4B, it allows us to kind of see things from a bird's eye view of the four major U.S. equity indices here. And again, things were looking much brighter earlier in the day until we had that late day sell-off. One thing that a lot of folks were talking about on Twitter and other social media venues and business television and such was the what appeared to be a breakout in the Russell 2000. You'll notice here in the lower right-hand corner, the Russell 2000 went all the way up to 1619 at one point during the session, and in doing so, completely broke all of this prior resistance from this time period that stretched from basically the second week of August to the first week of September. So we had this long period where the Russell 2000 just simply could not advance. And so all of a sudden you get a day like that yesterday, which was very ambitious for the bulls to close that index up as aggressively as it did. And then you have a follow-through day today, which breaks through that old resistance area. You're thinking to yourself, okay, there's something happening here in the small cap land. But by the end of the day, you can look at how terrible that candle looks now. All of a sudden, it kind of looks like, you have this really long upper shadow there, and you might have like a tombstone or a death view towards it. In other words, it is a strong selling type of a candle there where you close near the end of the session. And of course, you had us closing near the end of the session on most of the other indices as well. It just doesn't have the same type of a feel as the Russell 2000 because the Russell 2000 had so much optimism around it earlier in the session, and to give that all back has to be an absolute crusher for a lot of folks that were hoping the small caps could get into gear. Now, it is important to note that the Russell 2000, despite closing lower by 0.3% today, did end up still closing with a strongly bullish posture, as you can see right here, the dark green shading background. Plus, you've got the green moving average telling us that price is above a rising moving average. And we cannot make the same claim for the other three. S&P 500 was down 1.4%. Dow Jones was about almost down that much. And then the NASDAQ was actually down close to 1.6%. You can see all of those candles closed below their moving averages. So those moving average tips all moved to a red color. And you can see the background colors of the charts are all light green in nature, telling us that we have a weakly bullish posture, not a strongly bullish posture like we had with the Russell 2000. One other thing that I should point out is that we do have some bullish intermediate confirmation signals that exist after today's sell-off. We have those on the S&P 500, the Dow Jones, and the NASDAQ Composite. Remember, those are considered kind of buy the dips types of signals, where the longer-term intermediate posture is still bullish, but the red momentum line, which is the most sensitive of all of these, is in the lower reversal zone. Now, we wouldn't necessarily call this an ideal setup because the green lines here in all three of those charts cases are below 20, so it's not giving us a sense of a strongly bullish intermediate posture, but nonetheless the signal is there, so I thought I would point it out for you. Now quickly before we finish up here, let's quickly look at our three green arrows chart. This is chart 4D. And in this case, we've only got one of our charts with a three green arrows signal, and that's the Russell 2000. The other three charts no longer have three green arrows because they all close below their 30-day moving averages. And then last but not least, when we're looking at the 1040 crossover method here, you can see that all of them continue to have bullish longer-term postures where the 10-week moving average continues to be trading above the 40-week moving average. All right, so quick and easy there for us today. Remember, if you prefer the longer version, make sure you go on over to Twitter and click like for me. It'll be pinned to the top of my timeline, or you can do it directly on our website there. Otherwise, David should be back with you tomorrow, and then I'll be back with you on Thursday. So until then, I want to wish you all the best of success with your trades and your investments. Goodbye for now.